Hey everyone, I'm Cary Smith, and I'm with Client First Capital, and I'm sitting here with Amar Shah. And Amar Shah is the Chief Investment Officer for Client First Capital. And so, Amar, yesterday, January 27th, NVIDIA plunged more than 17%, casting off nearly 600 billion in market value. And that was, a bigger tech sell-off that exceeded $1 trillion in a single day. All of that was tied to concern about the success of China-based DeepSeek's new AI tool, which is now, by the way, the fastest selling app on the Apple App Store.
Yeah.
So for our conversation today, I want to pull up from the headlines, and we want to know, so we already know how the markets react, and we've seen how the media responded. I'm curious to know how portfolio managers and chief investment officers view an event like we saw yesterday. Most people are going to have some exposure to technology stocks. More specifically, they probably have some AI stocks. So as Client First Capital Chief Investment Officer, how does the news and events from yesterday change your process?
Yeah. So for our process, there's really no changes. Our process is still the same. We don't have a direct impact, but I can see that if you own NVIDIA stock and you're looking, somebody's created a competitive product. You're looking directly at your competitor, and they're doing it for a lot cheaper, faster. That's why all this value has been erased from NVIDIA. You don't need these expensive chipsets. I like to maybe step back and just talk about our process. I know we've talked about it a couple of times on YouTube here, but I just want to reiterate for somebody that hasn't watched any of our other videos on our process. But first, we're trying to contextualize the economic environment through the rate of change of growth and inflation. Now, growth and inflation are two very important metrics because that drives the majority of our economic outlook. For us, when we look at 2025 in the future here, we definitely see inflation increasing. Growth is going up and down a little. It's fairly stable, but there could be a surprise to the upside. Once we've identified what quadrant we're in by looking at this framework, we're really looking to backtest asset classes that have done well traditionally in these quadrants, because the market does not equal the economy. So we're really looking at the asset classes that have done well in these, or the sectors, if you will, that have done well. And tech is one of those sectors that has done well in this type of environment. Now, with yesterday's sell-off, was there an impact to tech? Yes. Did all tech get impacted equally? No, right? So there were, like Google, Microsoft, both were down 3% plus, that are good long-term positions that you may want to have in a tech-focused portfolio, or in an environment that we're in now where tech is slated to do well. But that process of identifying what economic environment we have, what is the market saying, where are institutional flows, has nothing to do with a company-specific risk, right?
Right.
We're looking at broad trends, broad markets. We're looking to capture as much of the trend as possible, and then when the trend changes, then we pivot to the next sectors that are posed to do well.
Okay, let me jump in here real quick.
Sure.
So I'm going to repeat what I think I heard you say. Please correct me if I get it wrong. And so what I think I heard you say was the process doesn't change, right? Our process is bigger than what happens on a single day in a market. However, as different sectors' performance begins to change, right, we might make some changes due to the performance of a sector and where we think they're going to perform in the future. But the process itself is bigger than the events of yesterday or a single day. Am I getting that right?
You're getting that. You said it way better than I could. But let's look at when we're in this quadrant 2 type environment where we have growth potentially increasing or surprising to the upside. which tech will kind of lead that. One of the things that we look at, or how this event could impact that, is that it could, reduce the amount of momentum going into that sector, right? As momentum slows down, then things underneath the surface start to break down, and then we're starting to kind of pivot in that sense. So this does not impact the process, but it may impact the data that we're looking at. And to be fair, we're looking at trend data, which we define as 63 days, right? So roughly 3 months of data equals 63 trading days. So when we look at data that long, there is some impact, but is it that large on the overall tech sector, right? So that now, when we started earlier, I mentioned if you own NVIDIA stock, well, now you're looking at the barrel face to face, right? And so that conversation could be slightly different, right? And that conversation is probably with somebody that's owning NVIDIA for some time, looks at it as a growth stock, looks at it as cutting edge. But when we do our analysis and we look at the asset classes, you have growth slowing down in tech, right? Like NVIDIA's growth is slowing down, right? So there could be some cause for some concerns as is this going to exacerbate the slowdown, right? But we're not giving investment advice here. We're just talking about our process. And, for educational purposes for individuals that do own that, there's probably some thought process that needs to go on into making a decision.
Okay. Well, I think it's good for investors to know that, yourself and probably other portfolio managers, you're really principled by your process. And because of that, we don't get caught up in the emotions or the headlines or the things that a lot of us get caught up in. And I spent a lot of time reading articles yesterday on what was happening, and even again this morning, right? But and it's interesting and it's good information, but it doesn't color the portfolio management or change the process. So Amar, I think this is a good discussion. Anything to add?
No, that's I think that's perfect. We have a math-based process.
Mm-hmm.
Most portfolio managers are sticking to their process. You're hiring a portfolio manager because they have a process. They're not swayed by emotion, right? The decisions are kind of algorithmic at that point, right? Like if this, and this is happening, you have this confluence of items, then we're making decisions in a certain direction. And I think that's part of the value that a portfolio manager adds.
Yeah. And I think that value really helps the investors whose portfolios you're managing sleep better at night, understanding there's a process. And so, Amar, this has been helpful. Hopefully, people watching get some value in this and understand the process a little bit better. If you're interested in topics like this and updates like this, you can find us at clientfirstcap.com. And there you can get access to sign up for our newsletter where we go in depth into a lot of different financial topics. Also linked to videos and Client First Capital Learning, which is our YouTube channel. You can learn more about us there, but I appreciate you tuning in. Amar, hey, thank you for your time.
Sounds good.
All right, see you.